Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and with me are two more Santa elves, Sonia and Anuj. Happy Christmas, everybody, and may the New Year, the Christmas Yuletide, and the New Year bring you a lot of happiness and good health.
Merry Christmas, Anuj. How do you guys feel? I mean, wearing all these Santa hats and celebrations galore. When was the last time you ever did that?
I think last Christmas, didn't we wear? No, the only nice thing is let's hope that Santa will bring good gifts for the economy, for investors. I mean, investors in big stocks have got a lot of gifts from Santa. Let's hope this time Santa blesses the mid-cap investors as well.
Yes. And you know, Sonia, for me, Christmas is always special because today is my elder daughter's birthday, so always it's going to be on Christmas.
I know, it's
Yes.
my son's birthday as well.
Exactly.
Oh my God, you guys have double celebrations today.
So always a special day.
Both of
and
them are
yes,
Christmas Eve babies.
Christmas Eve babies, so global holiday. So every time there's a party.
And there's been a party for investors as well, right, Anuj? I mean, it's been whatever said and done, this has been such a good year for investors if you pick the right stocks. The Nifty is up over 10% and whatever has been thrown at the market has sort of just risen from all the issues, and now look where we are.
Yes, you know, though if you ask Rhythm, he would say that, you know, stop cheering India. We have actually underperformed.
Yeah, we have underperformed. Because others have done 25%, we have done
Exactly.
12%.
Yes.
And if you're mid-caps, you're minus 12%.
Exactly.
So it
But
really depends
the
on where
mid-cap trend has been global. You know, it's and like we discussed, it's more than mid-cap. It's the leadership issue. You know, the market leaders have done well, and you know, laggards have not done.
Yeah, there has been clearly a men from the boys separation, and the men have taken it all away. Okay, I think for the moment, the markets are actually closed for business. I mean, we are hardly seeing any news or any news worthy of market reaction. So it is a quiet day. Yesterday we saw very low volumes. So markets are practically closed for business, but they have to work because the law requires you to work. It's more like that. I'm not getting any definite global cues either because Wall Street is off to the races, records day after day. But Asia is not quite participating. And we depend a lot on Asia, and all the metal stocks depend on Asia. For me today, perhaps the positive is that Reliance has already reacted to that news. So yet another day, it will not spoil the party. So maybe today we may have a Christmas Eve party after all.
Absolutely, and you know, it's been a party for FIIs for sure. I mean, if you look at the numbers, 7 straight sessions of buying is what FIIs have done in this market. And yesterday as well, there was about 1,400 crores of buying in the cash market. Just look at that graph. So Anuj, how does one prepare for today? Because you know there is a long weekend, there is a holiday coming tomorrow, and you have a lot of global markets shut, etc. So what do you do now? Should the strategy still be a buy on every dip, or is this time for some consolidation?
Look, I'll tell you one thing, Sonia, that this is perhaps a phase in which, you know, just want to take a bit of a break, you know, and just sort of you know, stay out, perhaps go out and all. It's not necessary to trade in the market every day. And yesterday, if you had traded in the market, there's a good chance that you would have lost money because yesterday the volumes were low, and in fact, for an expiry week, these are going to be low volumes. You know, even if you see the trade yesterday at 2:30, it looked like the market was down and out, and then all of a sudden the HDFC twins got into the act, and the market almost, in fact, at one point, Nifty was about to turn into the green from deep in the red territory. In fact, HDFC twins contributed 14 points to the Nifty, almost negating all of Reliance's 23 points on the way down. So the only problem, if you want to point it out, is that for the first time after 5 days, the Nifty made a lower high and a lower low. It doesn't mean too much because the volumes are low, but what it does is it gives you a nice reference point, 12,293, the Friday high, and yesterday's low of 12,213. I think the market is in this range now. You want to either trade the break of this range or you want to sort of fade the boundaries. I think traders will understand. Fading the boundaries would mean that you want to either sell around 12,293 and keep a stop loss of 7 or 8, 10 or 15 points, or you want to buy near 12,213 and keep a stop loss of 10-20 points. Or if you are a breakout trader, you wait for this market to cross Friday's high and then you participate, or yesterday's low, which is unlikely, but that's how you approach the market. The bank Nifty remains strong though. That's one point where clearly every day, for last 2 days Kotak is weak, but some HDFC Bank is participating. So there's some component on the bank Nifty doing well. The macro trade is still buy on dip. So the next time the market gives you a dip, say towards a 20-day moving average, which would be about 200 points lower from here for a slightly medium to long term, that would be the space to buy. But this week, I think best is to just stay out and enjoy the festivities.
I wouldn't be surprised if today, again, even yesterday I thought that would happen. Yesterday we saw a bunch of orders for mid-cap companies. Today we are seeing a bunch of upgrades for mid-cap banks, Syndicate Corporation. So my sense is, maybe some parts of the mid-cap will wake up from their long sleep, and we may see some activity there. Maybe Christmas Santa is going to give some mid-cap gifts after all.
Okay, if you go by the trajectory yesterday, absolutely flat. It has been a sleepy market, so maybe people are taking some time off for themselves. But let's see. For now, the SGX Nifty should come up for you. I haven't checked it in a while, so let's see how that one's shaping up. The last time I saw it was absolutely quiet. Right now as well, as you can see, not too much happening there.
I just want to check, Anuj, is there any likelihood of a pre-expiry day activity today?
Could happen, Balata, the volumes are so low, anything could happen in this market.
You can
frankly.
move the HDFC Twins to wherever you want.
Anything could happen in this market. The only thing is this week's market action, I won't give too much consideration to that as far as my overall, reading of the market trend is concerned.
Okay, we'll perhaps have to wait by for the first week of January once most people are back in action to see which way this market is headed. For now, it's been a buy on dips market and has worked very well for the bulls. But let's take a look at what our wise experts have to say as we head into trade this morning. Sanjeev Prasad of Kotak Institutional Equities says the government may want to weigh the merits of a broad cut in personal income tax rates to boost aggregate demand versus a more focused tax cuts and or benefits of specific sectors to boost both aggregate demand and supply, given the challenges of managing a bad fiscal position. Tax cuts often work in unintended ways and depend on the circumstances of the economy.
Okay, I can assure you a lot of economists don't agree with this scheme. They didn't agree with the corporate tax either. But let's wait and see. We have to wait till February 1st. For the moment, money market views, and they come from Bhaskar Panda of HDFC Bank. Mr. Panda says, we move towards the year end. He expects USD INR trade to be around the 71 pivot. Resistance kicks in at 71.30. For today, he sees the trade in a range between 71.15 to 71.35.
All right, and on the bonds, Bhaskar Panda says Indian bond yields adjusted to the new RBI decision to buy long-dated bonds against selling short-dated maturity bonds. The 10-year benchmark yield thus could consolidate within a broad range of 6.5 to 6.60%.
Okay, let's talk about the global cues then. Here's Sonal with the world view.
Hi, good morning. And yes, Santa Claus has come to town, at least for the US markets. They hit a record high yet again. That is on optimism that China will be cutting import tariffs on a wide range of goods. And that's why we see all the three indices closing in the green, and Dow surged as much as 100 points in trade. And majority of the gains were contributed by Boeing, which surged as much as 3% in trade after the company ousted CEO amid all the controversy around 737 MAX. Moving on to the European markets, there the traders are taking some profits ahead of the holidays. The markets, they closed in mixed territory. So CAC and the FTSE saw some greens while DAX ended 18 points lower. Some stocks were in focus there as well. But let's talk about sterling that dropped to a 3-week low versus the dollar. And if we talk about the stocks, it was NMC Health that surged as much as 34% in trade after the company undertook an independent review of business after attack from a short sell fund. Moving on to the Asian markets, they are mixed in trade today. Nikkei, Kospi and Taiwanese index seeing some profit taking, while Shanghai is up around 5 odd points, and SGX Nifty is indicating a soft start to trade. And also remember, Australian and the Hang Seng market, that will be closing early today because it's holiday season.
Oh, absolutely. All right. So a lot of markets across the globe are closing early for Christmas. But the big story for the global markets this year has been tariffs, trade and the Fed. How is the trade story going to play out in 2020? What will the Federal Reserve stance be? CNBC's Kayla Tosh and Steve Leesman take us through the likely triggers for the next year.
The Trump administration rocked the trade boat in 2019 with unpredictable tariffs and short-lived truces. In 2020, international trade will move back toward the status quo. First, China tensions return to a simmer. Fireworks will fade when the U.S. and China sign off on a Phase 1 deal in early January. A second deal will remain far off, but if China engages on and enforces this first deal, expect tariffs to be rolled back slowly. Second, farm finances will be in focus. As planting season gets underway, American farmers will size up the pain of a 2-year trade war and the salve of new business with China, Mexico, Canada, and Japan. Agriculture Secretary Sonny Perdue says more financial aid will be warranted if the ag economy doesn't rebound quickly. Third, Europe will be back in the crosshairs. As President Trump eyes re-election, he'll home in on a new target, the EU. With rising tariffs on luxury goods, the president's stump speeches will be testing ground for new material on auto tariffs and energy sanctions. But he'll pocket those fights until after November.
Nothing is more central to the outlook in 2020 than what happens to the trade war. It looks to have depressed growth here at home and around the world this year. It led the Federal Reserve to reverse course and cut rates sharply in 2019. Here's what to look out for in 2020. First, the trade war should improve somewhat, or at least not get worse. As the year drew to a close, that seemed to be the case already with the announcement of a limited U.S.-China Phase 1 deal. Uncertainties will remain, but business will learn to invest and prosper in a world with a constant rumbling of trade disputes. Second, assuming a lot of damage hasn't already been done, that should help to lead to improved global growth. That could help lift U.S. growth towards 2.5% in 2020, or a half point above where it likely closed out in 2019. But third, the Federal Reserve should remain on hold while much of this plays out. It could consider raising rates if global growth also firms global inflation and other central banks start to hike.
That's a pretty good summary of which way 2019 went and what the expectation is for 2020. But let's do one thing. Let's take a quick break. On the other side of the break, let's get our entire research team to tell you all the stocks that you need to watch out for as we kickstart trade today.
20 years of leadership in